welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, the mood in the market was as bright as the color that I'm wearing right now. It was deep red. Especially in the broader end of the markets, if you see, Yatin, 2 to 2.5% cut on the Nifty mid and small cap indices. There was some reprieve when it came to broader markets, last week, but that has been reversed once again, and you can see the pain in the broader markets. All the stocks that have been expensive and have not been able to deliver when it comes to earnings have got punished over the last few months, and that really playing out today as well. On the headline index level as well, we saw weakness. The Nifty below that 23,400 mark, in fact 23,381, that's where we shut shop, almost a percent cut coming in there. The Nifty Bank Index also down almost 200 points, but off the session lows, some bit of pullback happened there. But of course, it's the tariff tantrum, that is weighing in on sentiment, because we have had all the important events out of the way now. Budget, you had rate cut coming in, you had the Delhi election results also came in, and from a market standpoint, that was a favorable result, but still, the fact that Trump has said that he will impose 25% blanket tariff on imports, that has not gone down well with global markets and our markets as well. We were underperforming the other global benchmarks. But Yatin, looking at the action when it comes to the mid and small caps, as I mentioned, the advance decline ratio very weak, 1:5 almost. If you look at sectors, all of them were trading in the red. Realty and metals were the worst hit. You had autos, pharma, all of these sectors also sold off. No respite, no semblance of green. And if you look at the gainers, I think just a handful of them, 9 to 10 gainers in today's session. But let's talk about the losers first. Trent, that stock, Yatin, got badgered again, almost 5% cut there. You had steel names, of course, Tata Steel, JSW Steel, they were the top winners on Friday. But today, some of these metal names got hammered. So Tata Steel, JSW Steel, Hindalco, all of them under pressure. You also had the likes of Titan, ONGC, they were not doing all that well. On the flip side, as I mentioned, gainers few and far between. Kotak Bank, Yatin, has been doing well last few sessions and today as well. Among the gainers, top gainer on the Nifty, Airtel, good numbers and still extending its gains. Britannia, Tata Consumer, some of the FMCG names saw some bit of buying today after a few sessions of sell-off. ICICI Bank and some IT names also held out, the likes of HCL Tech, TCS, etc. But lots of movers, mid and small caps, they were grabbing the limelight today. But tell us about the movers and shakers there.
So, if you look at the Nifty 500, the gainers being Signature Global, Reddington, that continues to do well after the numbers. In fact, 4% rally coming in for that stock as well after good quarterly numbers which came in last week. ITC Hotels, and the Nifty and Sensex inclusion events are behind, and probably a lot of traction coming in given the valuations are supportive versus a closest peer of Indian hotels. Stock was up 4%. Engineers India also, after winning some orders last week, is showing some traction, 3% higher for that stock. But what was not doing well is GM Finance. So that stock was down 8%. Ujjivan Small Finance Bank down 8%. After a big cyber fraud in which Alchem is said to have lost nearly 22 crores, that stock was one of the top F&O losers as well, and top Nifty 500 loser. 6% down for that stock. And Sobha Developers and in general real estate stocks are witnessing some bit of profit taking. Sobha saw some profit taking, 7% lower for that stock.
That's true, Yatin, and the Realty Pack itself was down somewhere around 3% or thereabouts, the biggest sectoral laggard in today's session. But let's talk about the stocks, Yatin. Before talking about the stocks, I want to mention Rupee also had hit another fresh record low, 88. It breached that, although it did pull back. I don't know if there was RBI intervention or not, but it did pull back. But still, we breached that 88 level on the downside when it comes to Rupee. But the stocks on our radar today, M&M, that's the stock, that's the first one on my list. Of course, a good set of numbers, and brokerages have given out positive views on the stock, which is why the stock hit a record high in today's session. The numbers were pretty much steady, but of course the stock also took a U-turn, ended the day in the red. Outlook from the management is also fairly positive, and when it comes to the tractor guidance from the management, that's positive. They have upped their guidance from 5% to 7% when it comes to the tractor business. Overall, they expect the industry tractor volume growth to be somewhere around 15% in the fourth quarter. So on the tractor volume front, they are pretty well poised. But let's see what the brokerages are saying. Nomura has a buy call. Target price is at 3,681. They have taken note of the fact that the tractor guidance has been revised, and the next major catalyst will be battery electric vehicles and how the traction really picks up there. That will be the next major catalyst for M&M according to Nomura. The company, remember, is planning as many as 7 battery electric vehicles till 2030. And I think the first one is expected to launch this year itself. I think from here to 2030, 7 new battery electric vehicles will be launched. And of course, the management has also pointed out that income tax cuts that would lead to higher disposable income would spur demand for auto industry on the whole, which is what will also benefit M&M. Aside of that, look at CLSA. They have an outperform call, target price at 3,510. They've noted the fact that the company has seen a decline in their average selling price for auto and farm segments both. But despite that, the company has clocked in record auto EBIT margin. And that of course the brokerage has taken note of. Aside of that, if you look at some of the other new launches, XUV3 XO and 5-door Thar Rocks, as well as the new EVs, electric SUVs that were launched recently, XEV and BE6, these are some of the new launches that will drive market share gains for the company going forward. Although they have pointed out that it will be tough to maintain auto margins given the fact that they are scaling up their EV division. But tractor guidance is something that they have focused on, and they said that on the back of that, the outlook is fairly positive on the stock. Aside of that, look at Macquarie. They have an outperform call. Target price here has been raised by, in fact, to 3,643, and they've also taken note of the tractor demand picking up. And they're optimistic on the BEV, the battery electric vehicle traction going forward. They've also mentioned that the headline auto margin will be impacted on the back of losses that the company may see in their EV division. Management also came to CNBC TV 18 and they've said that they are seeing a lot of green shoots where rural areas are concerned, and they are very optimistic on the tractor industry. I think that has seen a pickup after quite a long period of slowdown, which is why the street is also fairly bullish when it comes to their tractor division. Overall, Yatin, if you look at the stock of M&M, last year I think it was one of the top performers when it comes to the Nifty names, has gained somewhere around 90% or thereabouts on a 1 year basis. And aside of that, but some brokerages are a little cautious saying that the valuations are a tad higher than their long-term averages. So the upside here on could be a little limited because all these launches and also the fact that rural demand has picked up. Tractor anyway was going to do better in the wake of good rural demand, right? So maybe these positives are already priced into the stock.
Yeah, positives are priced in stock trading at historic high valuations. And if you look at one more point which MM told me was that the electric vehicle mix will increase moving forward. Right now they are at a capacity of 4,000 units per month. And if they were to ramp up, it would require few investments, and also it will be margin dilutive. So overall, the EV business is margin dilutive, and that is the reason why they'll now present the EV margins separately to the auto margins moving forward. But yes, auto margins also came in better. Tractor market share also been much better. Let's hope the electric vehicle portfolio does not bleed as much because we haven't seen most of the auto companies make big money in electric vehicles because initially the production cost, the designing cost, marketing costs are higher. So for the short term, probably there could be some margin dilution. But moving from autos to metals, clearly metal stocks were in focus today after President Trump announced on his airplane Air Force One to the press that he would be slapping a 25% tariff on aluminium as well as steel imports in America. Obviously, this announcement comes after Trump has already, slapped tariff on China to the tune of 10%. He has already, spoken to Canadian as well as Mexican counterparts regarding tariffs, which have been now put on hold. But clearly, his statements have sent global metal stocks lower. In fact, today, most of the metal stocks were down anywhere between 2 to 5%. In fact, US is a big market for metal imports. US annually imports around $100 billion of metal products inside the country, and a 25% tariff would mean a lot. It's to be seen whether or not India is still, a preferred trade partner with US, because last time when Trump had, put on tariffs on select metal products, India was exempted. So whether or not India gets that exemption or India is under that ambit would be seen. But now, if you look at the metal index, it was down nearly 2.5%. In fact, in the last 3 months, the Nifty metal index is down 10%. So, last 2-3 months have been quite rough for the steel stocks and the aluminium stocks.
Yeah, I think the major worry is how margins will get squeezed if export costs go up, and also the fact that if they are unable to export to US, they will be left with more supply, and that would drag their profitability as well. I think these are some of the scares when it comes to the metal names. But Yatin, another stock, a media stock that was in the spotlight or under the limelight was Sun TV. The stock dropped to a 10-month low. Numbers were weak, margins, if you look at the margins, saw a big drop, 10% drop in margins on a YY basis. Advertising revenues declined, which in turn impacted their operating performance as well. And, if you look at what the street has to say, they are fairly downbeat, and they have pointed out, or they have made some points as to what the company really needs to do in a bid to improve, their market share and, their revenues going forward. Let's first see what CLSA is saying. They have a hold call. Target price has been cut to 670 rupees. They've said that, of course, the earnings miss was led by a decline in advertising revenue, and even subscriptions saw a low 2% YOY growth for the company. Margins were also dragged down by Hindi channel launch Sun Neo. And aside of that, the company has also recently secured a winning bid for one of the 8 franchises of a cricket league in UK, and that would also have some bearing on the margins going forward. Nuvama has also, they have maintained their buy rating, but the target price has been revised lower, sub 1000 rupees now, 955 rupees target on Sun TV. They have trimmed their FY26 and FY27 earnings per share estimates by 8.5% each almost. Weak third quarter numbers and falling advertising revenues are some of the factors that Nuvama has cited. But they've also taken note of the fact that the company has a strong regional presence, and compare it to the likes of Z, they have also successfully entered the southern market and on a large scale. But Sun TV's expansion into the northern market needs to be more strategic. That's what Nuvama is saying. They need to ramp up their presence in the OTT segment, because right now they are recycling linear and movie content for OTT. But what they need to do, according to Nuvama, is that they have to take a very aggressive approach in creating original content for OTT. And they need to also be more aggressive in acquiring movie rights for the OTT platform, in addition to the marketing efforts that they are already carrying out to basically capitalize on the fast expanding digital media segment and strengthen its competitive position as well. Lastly, Motilal Oswal is saying that Star Viacom merger may also pose a threat to Sun TV. Yeah. In fact, the merger could intensify competitive competition for ad revenues in its core networks, and that could lead to a reduction in their IPL media rights also, which in turn will impact or drag valuations of their IPL franchisee, which is the Sunrisers Hyderabad. So yes, there are issues, but there are certain pointers that these brokerages have come out, which the company, if they do that, then perhaps there could be some better days ahead. But for now, the show is not looking all that exciting when it comes to Sun TV. Yeah. Because the stock, it's down somewhere around 20% over the last 3 months, Yatin.
Yes, and media stocks in general have seen a slower Q3. Probably because of slower demand or changes or investments that they do, depends on company to company. But Sun TV, yes, clearly results were quite disappointing, and the stock also witnessing a 4% correction today.
Well, I think it was all round red, not a great start to the week, Yatin. I mean, when I came into work, I didn't know that it will be such a deep cut. So perhaps tomorrow I'll avoid this color, and hopefully we'll see some bit of buying. But 23,300, Yatin, on the downside, crucial level to watch, because some of the experts are saying that if 23,300 gets taken out, 22,800, these are the kind of levels we could be staring at. But let's hope that doesn't happen. We also have Prime Minister Modi on his US visit. Let's see if we could thrash out a favorable deal in terms of tariff and how things really pan out. A lot will hinge on that. But for now, I think then it's time to call it a day. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.